Live brew. Live brew, ladies and gentlemen. That's the new name of the sessions that we're going to be having here on Cryptopocalypse now. So let's kick it. As you know, my live sessions on YouTube are a way for me to get my point across without having to edit and cherry pick information, price prediction, live trades. This is something that we have been doing for quite some time now, and we'll continue to be doing it. So here we are. Chat should be working. Let me just make sure that all systems are online and operational. We're drinking some tea, and if you're a student of the market like I am, you will appreciate this time together. Well, I think I'm going to edit some parts of this stream for you guys later. If you're not here, if you're not able to join. Yep, we're gonna have to fix a little something, a little quick fix. We need to fix it. So I'm back at my meditative desk, not my usual work desk. It is Saturday over where I am. And so a tea drinking session with a couple of trades to prepare for Monday. There have been a couple of updates regarding my prop firm journey. As you know, MarketSpy, we kind of ventured into the futures because Bitcoin is based on feedback, is not something that everyone can trade these days using leverage. Lots of people have come in with the hopes, dreams, and aspirations to take on the market and become lifestyle day traders. And so they have been told not to use leverage. They have been told that you need to have certain attributes, skills, qualities before you venture into trading the market. And they didn't listen. They wanted to get rich quick. And many of them were so enthusiastic. And you know, enthusiasm, the joy of winning trades, is just as bad as the miserable existence of a losing trader who's always complaining and blaming the market and external factors, but never themselves. And so when we're talking about emotional control, we need to also talk about not getting excited over little achievements in life. This is normal. Everything is the result of your doing. Whatever is happening to you, it's the direct result of you being the way you are in relation to the markets, in relation to everything else in life. And so my position was to try to get these meaningful sort of insights, lessons across before the technical setups, before figuring the market out. You know, I wanted to get that across to people. And I'm not reading the chat. Nothing is coming in. This is extremely frustrating. I might have to end this like now, soon. I'm really sorry about this, but you know, I can't give up. I cannot give up, and I have to figure this out. I have to do this the right way, and so I'm going to spend a little bit of time here just so I can get the chat to come back, because it is not. No worries, we got time. There's people streaming for 8 hours. You can handle this. Nobody needs to serve you. If you want to hang out, you will hang out. And that's another thing in life. You don't really have to do this for anybody else but yourself. You know, I recommend everybody to just figure this, your social stance. Because you know, that's what it's like coming in with expectations. Like, oh, you know, there's so many videos about how you should or shouldn't do things. Well, let's say you go and have your own adventure and figure things out on your own. And you don't have to. You always have the option of asking for guidance from those who went before you. But overall, this is something that you're going to have to figure out anyways on your own, right? So to me, it's like, okay, yeah, well, for example, this stream right here, it's not perfect, you know, nothing is set up, nothing is working. But then again, if you don't do this, who is going to do this for you? Who is actually going to come in and do this for you? Nobody. So there is no shame in the game, and trading is the same. No matter how bad it looks, sometimes maybe there will be losses. If you're trading every day, I guarantee you there are losses. That's why I tell people to trade less, but nobody's listening because they want to get there quickly. And this is what today's session is going to be about. Once I figure this out, is we're going to really start demonstrating and also getting into the subject of timing the market, because first of all, there's like a personal challenge in terms of you know, people saying that you cannot time the market. I cannot sign in no matter what I do. Oh, is it working now? Oh, Josh. Yay. So first message came through from Twitch. So see, results, right? You try hard, you do this, you get your results. We're seeing some results right now. And that is just like trading. You know, you can sit there and wait for something, for the magic pill, for something perfect to happen to you, to find that magic pill. Or you can start collaborating, participating, yeah, and I think this is it. It's working now. We are online, chat is live, so boom, we can now all right, energy. Okay, so it is good to see you, Josh. It has been a while. It has been a while, but you know, market time, it's a blink of an eye. Remember 16K? Yeah. Remember what happened to Bybit and how they recovered? Remember FTX? Remember Luna? Remember the China ban? Remember Bitcoin? BCH, what is it called again? Bitcoin Classic? No, that was Ethereum Classic. So all these things, right? It was like in the blink of an eye. But we're going to be drinking some tea, and what I'm going to do is I'm just gonna jump into the the strategy thing. Right after this brew, right? So people are saying we're cooking. Well, guys, we're brewing. You are brewing. If you're part of this live stream, you are definitely brewing. And the Bitcoin chart was brewing. Again, I'm going to emphasize the fact that I have been calling for 1,007. 100,007. 107,000. It's too late for me here. 107,000 was in development for a long time. You can look at my YouTube posts in the community. You can look at some chats in our Discord. And it was like 107, 107, 107. And we can pretty much forget about that level. For the time being, Bitcoin has forgotten about it. But what you're seeing here on this chart, I'm going to get into this real quick. There's going to be some alpha here because I will show you this one particular instance of there's a phrase. Okay, so TPT, right? Take profit trader is something that I have been advertising. You can check the description below to learn more about what that is. I'm basically 70% there on the evaluation, right? And I've used the same strategy that I have been preaching for the past month, ever since I came back to our Discord. And I have been talking about DSR. There's been a new release, new update on the side of DSR, all things DSR. And there was a Loom video that pretty much described all the setups that led us to 116,000 on Bitcoin from that 107 level. And so I really want to talk about what is a trading mindset, because there are channels out there about the trading mindset. But P-Jan, hello, good people. Great to see you too. P-Jan's our people for sure. Do you guys hear the jingles? The jingles are not supposed to be there. That's just for me to be notified when chat is active. By the way, you're now collecting points. through interactions, and this is going to be a monetary sort of giveaway situation here. So I can't believe I'm forced to do this, but the more you chat, the bigger the reward. And I'll explain how that works. This is something that I have built in recent times. This is brand new. And I'm at my meditation room. I'm away from my desk because that thing just drains me out. Whenever, you know, when it comes to actual work is like analysis drains me out. And so sometimes I get really, because I have those client calls, like specific needs for some clients that I have, and so that takes a lot out of me, and I just want to have this session where I don't really have to think about whether I'm being optimal, efficient, or any of that. Because efficiency and optimization is for the machines, and I'm not a machine. And neither are you. Okay, so, all right, so the point thing is growing. Okay, let's see. Let me just move that out of the way because it's just covering my cam. You can't see me anyway. I mean, you can a little bit, but you know what I mean. Oh, I missed the last one. My wife just delivered a healthy baby boy last week. Oh my goodness. Congratulations, Josh. Sitting in. Need to catch up on those videos and new update. Oh, don't worry about it. The market can wait. You know, this man here can wait. But congratulations. That is awesome. You have to think of it as you just got yourself an employee in the future, right? That you can work with, a partner, your best friend. I mean, the luckiest person in the world. And start a business together in the future, all that jazz. Teach them how to trade. You know, save up a little bit. Don't blow it on leverage too fast. Just slowly, and just fewer trades but more quality, right? This is what I want to talk about in this chart now. But yeah, once again, congratulations. This is amazing. I have 2 kids myself, and it's the best feeling in the world. We can get into the debate of you know, it's all in the perspective, right? But having children is an amazing milestone, I think. And it is not difficult at all. Many people are just scared. And that's unfortunate because, you know, doubt is not something that we need in our lives. We need conviction. We need understanding. And children, they give you understanding. They help you understand yourself better than anything else in the world. Well, next, the market would probably be like the #1 thing that will help you, if you're open to it, understand yourself better. But children are amazing. And this is a little empire, you know, this is wealth. This is that true generational wealth. When people are talking about, you know, making it, basically, once you have a child, your job is complete in this world. There's absolutely nothing you have to worry about. You literally duplicated, replicated, copied, cloned yourself into this beautiful life form that went from you to them, and it's just magical, right? So you're halfway there, right? That's peak right there, man. Congratulations. Anyways, I got a little too excited. I mean, I should be. This is every time I hear something like this, it makes me be excited. Yeah, P. Jan. A lagging indicator. Everything is lagging. And so take profit trader. Well, the reason I brought them up is I'm going to move forward now. I realized that, you know, YouTube is probably, they figured this out a long time ago. I told you guys how I'm sort of fighting this algorithm. I've disabled all the monetization on my channel, and YouTube's like, you know, this is not a channel that we want to support money-wise. But there's like another aspect to this, and that is everything that I say here, everything that I have chosen YouTube as my platform to communicate with the select few who are also passionate about the markets as I am, and who are either attempting to do this full time or have been doing this full time, and they just want to upgrade themselves in this in the field of day trading. And you know, and so I use these social media platforms like YouTube as a way to communicate my ideas with the select few. And I don't generalize, you know, I don't say things like, what's going on, chat? And I don't even know who the hell you are. It's like, yeah, welcome to the stream, guys. You know, let's get down and dirty. Let's do this. So, and that is working against the promotional algorithm or whatever YouTube is using to push channels out there. I'm pretty sure people would find great value in what we have to say about the charts and in the directional calls that we publish. When I say we, it is a team effort. You know, I feel like the few people in the community that are active, it's, you know, not only are they the motivator to call anything at all, but also because I know it's good for business. You know, if you guys stay trading long term, it's kind of meaningful to be doing this perpetually. Nobody wants to see an account get blown up and then disappear into the obscurity of unknown. And so we do this because we've gotten to know each other over the years, and I like it personally, right? I do wish that we had more participants, more activity, but what are you gonna do, right? So if I start to generalize and kind of target everybody with videos that are like abstract and ambiguous and not really to the point, not specific, and just keep pushing updates every day, Bitcoin up, Bitcoin down, which is very easy to do. You could just say, so for now, I could just point an arrow down, and I'm pretty sure by Monday you'll be sitting at 114,700, right there on the chart, right here. Like, I almost guarantee it. I know you're probably thinking, yeah, but we're bullish. We're gonna go there, and I'll explain now how you can have so much conviction. And actually, what do you do with the stops? Stop losses. That's the most important thing here, because that defines your risk and everything. If your stops are safe, you're safe. If they're not safe, you're not safe. But also, because when the stops are safe, you're not risking anything. And if you're not risking anything, you're not getting any reward. So it's a tricky catch-22 situation here, where you need to be using leverage, because that is the whole point of derivatives. Otherwise, you just buy spot, except you cannot short spot, but you can sell, wait it out, wait for the next dip. You can actually be subscribed to this channel and just visit the community page every once in a while, and I do these macro updates. Just wait for the level. Like the 107 recently, I said, just buy 107, wait for 107. Price is headed that way. And so yeah, in that manner you can get away with it. But day trading is a little different though, isn't it? You need to use size, but you can't use tight stop losses. So this is what I wanted to talk about in today's session, if you're willing to sit through it and listen as we drink this amazing tea from China. Do you know that it's not actually oolong? The way it's spelled, like OOLONG. It's not oolong. It's actually woo, because it comes from the Wu Mountains, Wulong. Anyways, Wulong tea is what we're drinking here today. So I've been pondering, I've been thinking about how I can better present information that is going to be there once and for all. Guys, it's been, some of you, I know you're doing well, some not so well. For those of you who are not doing so well, it's been over 4 or 5 years almost, right? Cryptopocalypse now is going to be having its anniversary next year. 5 years in the game. And the strategies haven't really changed, and just based on what I'm seeing here, so I have this chart. I broke it down. This is DSR, and I want you to replicate this. This is going to be a tiny little exercise here for you to bypass all the unconventional conventional methods of maybe backtesting, or there's just too much noise in the market. I want you to skip everything and get to the point, right? And I'm going to explain and show you by example of what you can do here to actually uncover a little bit of edge for yourself, right? Now, you can stick to your own strategies, but I guarantee you that this is going to add so much to your understanding. And the biggest strategy for us right now should be knowing when not to trade. And so Take Profit Trader, I keep circling back to my description in the box. If you sign up as an affiliate, I appreciate it. I will make a little bit of money from that. This is an affiliate program that seemed very interesting to me, and I said, if I can help you navigate the little quirks of trading futures, then there's something in it for me if you do well. And well, you will do. So we're gonna get into futures on New York Open. I figured out the schedule that is mostly universal, and we don't really have to think about time zones, because most action happens on New York Open. And there's also something that you can do outside of the during the pre-market session as well, which is where, believe it or not, I have been making all of my progress towards getting a funded account. The risk parameters are, like I said, I'm going to leave some path notes about my journey personally through a prop firm, but I'm on my way to becoming funded very, very soon. I understand behavioral patterns of volatility of futures based on timing and relative to DSR levels especially. So I'm going to talk about that. But in the meantime, if you're interested, let me hear you say that in the comments. Do you want to know when you should be trading and when you shouldn't be trading? Because 1, we'll get the timing right. 2, we'll develop a stop loss strategy. Well, not develop, I have developed it, I'll share it with you. And 3, we're going to talk about, in the same breath with stop loss size, what size does and doesn't, and when you should use size trading versus just participating for smaller catches here and there, 0.1, 0.2% of your account. Because to get to 1%, the number is small, but it takes a little bit of mastery to do so. Okay, PJan. So that's enough. You're here for a bit, so let's get into it. Let's mute the music a little bit right here. Much better. There we go. We can focus now. So I stripped down the chart using DSR settings in this manner. I've disabled my activate central pivot range zones. Everything is set to default daily. And then I have my sort of CPR parameters here in this manner, where we use current CPR, not tomorrow's CPR. There's a strategy for tomorrow's CPR, but that's not of our concern right now. We want to get the basics right, the fundamentals. We've got CPR upper pivot level. We don't care about R1, R2, R3 at all. We only care about R1 in this context. We have CPR high probability, which is what I have been calling for traders to take advantage of. High probability levels means that you are getting these high probability hits. And we will go back to 107 and count these setups all the way up to current price levels and see whether this theory can be applied in practice or not. So CPR high probability should be on, because these are the main levels that you need to be working with. Now, MarketSpy in general consists of many modules and indicators intertwined to create glimpses into what's possible and strip out the noise. It is noisy, but the reason it's noisy is because we want to get rid of the noise in price action. So you can either have noisy price action, or you can have noisy indicator bundle, or a system that, if you have the right vision to look past all the lines and everything, that you can understand the context a little better. So I decided to start from the beginning by turning everything off instead of just overwhelming our traders with information, which is information poisoning, is something that I'm super against. And so let's just align ourselves with this philosophy that less is more, but also we need context. So we're gonna start adding more to this basic bare bones skeletal setup over here. Price labels, you don't really need those, but I kept them so we can see what the price is, but they will be reflected over here on your scale anyways. Like, all the important levels will be reflected on the scale. You can see those there. Developing CPR is off for now. We don't need to worry about that. Ranger rails are also off, but they'll come in clutch. They'll be super handy as we start moving forward with these setups over here. Everything else, such as the EMA ribbon, I've turned that off as well. You don't need the ribbon. And you don't need the consolidated, or as it's currently called, consensus super trend, which is basically 3 super trends consolidated into one simple line. You don't need the cloud, and you do need the orb Chico lagging span. You need to keep that in there. And you need the trailing steps. Where are they? And the alerts. The alerts are very easy to use now, and so I hope you're taking advantage of the new update. So our job is to figure out, so in order for us to find out when we can go big and when we cannot, because as you know, as I'm trading these prop firms futures, I'm starting to understand that sometimes it's not really about finding clean setup that you can hold for a while for specific levels, but it's more about being a momentum player where you can scale up real fast, because execution time, for example, with Bitcoin, I'm gonna be all over the place here, but give me a little Give me a little space here, guys. I'll try my best. So on Bitcoin, you would go and let's say, now when we had Poet, we had a feature like chasing price, right? Manually doing it from TradingView, for example, is impossible. It's clunky, it's slow, so speed, execution, chasing price in the direction, if you're talking about momentum, is crucial because every single point on Bitcoin counts. And Bitcoin is the kind of price action, it's stop and go. I call it stop and go. So it does absolutely nothing, but then out of nowhere, boom, directionally, and this is key, right? We need to know directionality. Directionally, it moves in a particular direction, and you're like, there it is, that's the breakout, because big candle means buyers, right? Even though I have been saying before that the smaller, unwanted, less appealing candles is where you want to learn how to position yourself there. Instead of chasing big candles, for me, automatically it's a skip. If I'm not long or short from the small candle before it turned into a big candle, then it doesn't really count for me. So anyways, Bitcoin stop and go futures, it's kind of like grinding in pre-market, then expansive volatility during New York session, then a direction is being chosen during that session, and so that's a time not to trade. Most people trade the New York session because they see that volatility and they're like, wow, this is really exciting. So excitement is something that we want to stay away from, mainly because we want to be balanced emotionally and not get involved with psychopaths trading on the opening bell on Wall Street. So we want to avoid that. We want to be sneaky and kind of move with the smart money. It's not really the smart money that trades at 9 a.m. It's just conditioning. And it's been that way for a long time, and people have gotten used to it. And so the sentiment is that, if she moves, she grooves, you can make some money. But anyways, once we have these settings on, I am on 1 hour, but I'm sorry, TPT, right? TPT sends out emails. Now, if you signed up for Take Profit Trader, you have probably received a couple of emails, and I found those emails to be, they start off very strong with like a strong message, but then the marketing comes in and they're like, oh yeah, have you opened an account yet? Blah, blah, blah. Same old business, right? But in the beginning, they tend to, I don't know who's their writer, but it's really solid stuff. You get some wisdom in those emails. And the latest one that caught my eye that I received from Take Profit Trader was they were talking about there was a phrase that they were kind of focusing on, and they were 100% right about it. I don't have the email with me right now. I can't read it to you. But it was something about bears make money, bulls make money, and pigs get slaughtered. And that gave me an idea. I thought to myself, we tend to hear these things. So for example, if somebody sneezes and you say, bless you, do you even have any idea what you're saying? Why are you saying bless you? Because everybody else is saying it, right? You don't even know the origin. Well, some of you guys might, but I'm betting that 90% of people don't know what they're talking about when they say bless you. And why is it during the sneeze only? Why is that a special occasion? And so we just say it because everybody else does. And so when it comes to Wall Street language, right, or culture language, when people say things like no position is a position, right, and it kind of makes sense, and so you just kind of roll with it, but you don't really know what that means and how to execute it. Like, how do you actually apply that wisdom in your life? Because what part of this chart is the no position part, right? Can your system actually tell you that you shouldn't be having a position here at all? Doesn't matter what the structure or the signals are telling you. So that's interesting. So they brought this phrase up, that bulls make money, bears make money, but pigs get slaughtered. And so this phrase tells us that we must identify when we're being pigs and when is it time to be a bull and when is it time to be a bear in order to make money. Because following the majority on the downpour, like this, for example, you're bound to make money because trend means everybody. So if you follow the trend, and there's definitely a trend here. If you look intraday in between the lines, 1 hour is a pretty significant time frame for an intraday trader, because if you were to trade these signals here with any sort of indicator system, then at most you're getting an average entry, because first you need some sort of confirmation. You can't just short a candle because it's red. You need to wait a little bit, have some time pass, and then decide and say, yeah, this is looking weak now. But while price is consolidating and it's looking weak, maybe you've waited too long, and just when you thought that it's gonna go down, you lost track of time, and it's been 8 hours and price hasn't gone down, even though you have the setup. And so this is where you're off on the timing, because you are hoping, or you're in a position and you're maybe slightly underwater, but then explosive reaction happens when traders see that there's clearly exhaustion, and price can do absolutely nothing, move sideways, but on the oscillator it will look like it's going down. And so you'll create a little ditch, and then the GPS dot gets printed or something like that, and then it just whoop reverses up, and you're like, why? Well, a new day has begun, and DSR is here to show us when these events happen, when they're likely to push price in one direction or the other. So we need to figure out when not to be pigs. Okay, realistically, this is nobody's exempt from this, and sometimes I'm being a total swine, if I may be honest, when I'm trading. Because when leverage is involved, when you have a good system, you're kind of, you kind of think to yourself, this is definitely, but then sometimes it's not. So timing is very important. And so to me, it means that we have to figure out basically when we're being pigs, when we're being bulls, and DSR, luckily for us, can tell us that. So using the CPR as the backbone system to understand pivot points and daily opens, well, there are many systems out there that talk about daily opens. There's value areas, this and that. To me, that's a lot of noise, because I guarantee you that everything comes down to exactly 1 hour risk to reward ratio, depending on the rate of acceleration of price in one direction or the other. Meaning, regardless of what system you use, you are still trading against time, not other people. And so in this example, for example, right, the absolute best example would be on NASDAQ. The market is closed right now, but there was this one period in particular right over here where you had a whole bunch of noise, and this is really hard to survive. Now, if you got caught in here, and for example, if you had the conviction to chase the candle up or down, you're basically getting liquidated instantly if you're trading with size. And most importantly, I think that's not even it. I think this is the part that I'm referring to right here. Yeah. Or is it? I lost count. think this is when the take profits and the so this is a news event. There's a non-farm payroll. I think it was Friday. Anyways, let's wait for the market to open up. I have no idea what that was. But since we're on Bitcoin and there's a potential for you to make money, as we're speaking about this level that I told you about, price is slowly making its way down there. So, and you will see how we will tap this level specifically. And it's going to be a very interesting situation, because I am interested to see if people are going to step in and buy this. and they probably should. They probably should, because the level is going to hold most likely, but we'll see what happens on Monday. For now, I can tell you that this is the first time when the levels are super thin again. Last time I was so excited about these levels. We were down here. I was like, guys, look how thin those levels are. It's going to get crazy volatile. Period is you know, just around the corner, and then boom, 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 and we're up here. And so, focus. Let's. I'm just trying to find a way to make it click for you, right? So far, we haven't talked about nothing. We haven't talked about anything over here. Look at this. 1 hour time frame. And today's price action, and we're going to move on to 107 and then take it from there, but just today's assessment first. So we're looking at all these things happening, and you're thinking, okay, are we going up or are we going down? So DSR is split into, you have your beginning, you have your end, and you have your middle. And I kind of talked about these levels and the importance of timing, the beginning, the ending, which is the end is the beginning. And then you have your half. So there's like two important areas, which is the half and the beginning, in context to what has transpired the day prior. My short that I posted with the scooter, I talked about a breakout and how we were gonna tap a level. It was somewhere around here, and that happened, right? So there was definitely like some alpha even there. And that's because we stayed above these yellow lines. So anytime we're above the yellow lines, we're basically long. Every time we're below them, we're short. So the pigs are the ones that do not trade these levels over here, right? I'll show you very specific levels. So pay attention to high probability setups, right? High probability setups, when you have the pivot and the high probability, basically they're so close to one another. And that was an example on NASDAQ. I'm actually going to make a good video on this subject in detail, but this is just a hangout session. So when high probability levels, both of them are high prob, are so close to one another that these are the areas where you think price is going to continue going down, but then it reverses. But it has nowhere to go. It hits the high probability level, and that's it. Your travel distance, the travel distance, right? Guys, MarketSpy, day trading, there's only so much space in time that you have to take profit and to get in. So the way you look at this is, if these levels are super tight, that means price is going to be ping-ponging around, and there's really no reason for it to basically continue in one direction or the other. And this is where pigs get slaughtered. It's precisely between the high probability levels. In the world of CPR, actually, this level right here at the top and this level right here. You can't see it, but there's an R1 level. So there's an R1 level over here and there's an R1 level over here. Anything that's between these two levels for like really high conviction professional pivot players who are not momentum based, this is called a no trading zone, believe it or not. So a good trader would wait it out. You know how we have those very thick levels on DSR, on CPR when it's like super thick? Man, what's going on? My face is gone behind this panel over here. I have no idea what the panel is all about. How do I move it away? Not like you need my face anyways, but like, you know, this is a little aesthetically disturbing. Move her up a little bit. Oh my God. There you go. Or something. I don't even know what this is. Point system. Okay. Yeah. Screw it. So between these two levels, between R1 and S1 is a no trade zone, but price spends most of its time chopping precisely between these two levels before a breakout. A breakout is a very rare thing. A breakout is the kind of thing that when I come in to our Discord and I see people are short when we're having these breakouts, I don't understand it. I don't understand why. You need to be short when we're below any of these levels, and you need to take profit very quickly. So we're not these pivot players that are waiting for a couple of months to have a huge breakout, let's say on a weekly chart or something like that, to secure that trade, because, you know, again, that can fail, and sometimes it does fail. There are no guarantees here, and you can lose a whole bunch if you're not careful with your sizing. And so the bigger the time frame, the smaller your size is, correct? That's the problem. The bigger the time frame, the smaller your size is, because the actual levels of stop loss placement they're proportional to the risk reward system of markets. So if you go to a 1 time frame, 1 minute time frame, 5 minute time frame, your reward is there. You know, you can get your account up very quickly, but you can also lose a lot of money if you don't know this part that I'm about to cover. So no trade zone is defined according to the actual CPR creator is here. Well, slightly, it's actually above here and here. So it's more like this. This is a no trade zone. So as long as price is here, they're not trading it. They're not touching it. They're not trading it. So what do we do then? Since we're inside and every day we do have opportunities. So luckily we're market spies and we gather information based on a variety of data points that minimize noise and give us conviction. And so we don't really have to wait based on a single indicator like the CPR to wait for a breakout and then kind of start sizing up from there, and, you know, and so on and so forth. So 1 hour right away, I can tell you that if you're intraday and if your session were to last within a 4-hour time frame, like realistically, maybe you have a job. So you come and let's say you do find the time to be at precisely the open of the CPR, not daily open, but precisely the CPR open, which is the daily open. And then you also have the time to be there at half point and give yourself, let's just box ourselves in and say 4 hours is all we have to make some money. All right, 4 hours. And right away your framework, your thinking here is, okay, since this half, we have 1, 2, 3, 4. This candle is in progress. This is very important because if you don't take profit on this candle, there's no guarantee that price is going to go to this level. It is a high probability level, but it's not a guaranteed level. Yeah? Never is. But directionally, you know that this is a point where we're headed. Now, the problem is, even though we don't have anything on right now, and this is a mental exercise, you can see visually how there are moving averages. I want you to imagine 1,000 moving averages separated by one period, one from another. 1,000 of them. Now, if you were to add all of them, all the indicators all at once, this whole panel would be filled with just basically just so much noise. And sure enough, at one point or the other, price will bounce from one of these moving averages. And this is why we need to have a very good system that calculates levels on an institutional level, algorithmic level, so that we know what is most likely a common average for price to bounce on with this understanding. So since automatically, even though we don't have much going on right now on the chart, invisibly in the background, we have thousands and millions of invisible lines that are basically signs of either support or resistance. Except when it comes to price action, it tends not to really care about those levels except for a few. And CPR being actually one of the best indicators for this purpose, it's something that you tell yourself, I'm going to learn this well, and this is all I need. I don't really need anything else. And so the purpose of this is to show you what can happen here based on this information. So now we established that, okay, if we have 4 hours, if we have work, we have kids, we have responsibilities, we got grocery shopping, we got to talk to do the payroll, there's that. If you have so there's a lot of stuff going on here. This means we need to drop down a few time frames. Now, obviously, you can see that within this span of multiple hours, 9 to be precise, 10 actually, this is the 10th hour. Anywhere here, you would probably be chopped up because we started this conversation talking about identifying where you would most likely be forced to become a pig and not make any money and get slaughtered. Bulls wait for clean technical setups. That's the language that's being used on Wall Street. Bears, they wait for clean technical setups that are bearish, and bulls go for bullish. But pigs, they jump in anytime there's a candle, anytime there's any sign of food, the swine just goes for it. It doesn't really care. There's no discipline, there's no schedule, there's no structure, there's nothing. There's no understanding. There's just everlasting hunger. It just wants to freaking eat all the time, right? A bull is hard at work, so is the bear. The bear is extremely cautious and vicious and panicky, and he's ready to defend his own. A swine will eat its own. It doesn't really care. So being a pig means, in context of like indicator wise, what you're looking for is you're looking for high probability levels that are intraday very tightly knit together. So for example, down, up, and there's nowhere to go until you have a breakout of one of the high probability levels. So this is very important. Either you have a breakout over here, either you have a breakout over here, either you break out over here. And the next thing you tell yourself is, now wait guys, I'll show you some magic. We're going to expand on this, right? But the next thing is you tell yourself is, okay, breakout, if it's a breakout, one, automatically where's my stop, and number two, what is my target? What is my exit? Because I can exit here, or I can listen to CR and say that, yeah, high probability is right here. Well, not CR, but MarketSpy. And what is the stop loss placement here, right? And what is my contract size? So regardless of what's happening here on the 1 hour right now, actually it's been going really, really good since the start of the stream. Directionally, we're already like a few points down, which is great. I can't trade and stream at the same time. We're down by 400 points. I need to lock in, but I wanted to share this with you so that you may do this on your own. So if we drop down to then, so we have 4 hours, right? Are you tracking? Are you still with me? We have 4 hours at our disposal. We're not waiting all day. We're not holding overnight. We're trading with leverage. We need to be in and out within a span of 15 minutes. So this means we have to skip a multitude of 5-minute candles, which is basically which is basically anywhere from the start all the way to the second half. I have said multiple times before that the second half is your second opportunity to make money, and then after that is just after that you're being a pig if you're not there at the beginning of the half and at the beginning of the daily open. So for me, if I'm on the eastern side of the world where the sun rises, you know, I gotta rise with the sun, and that's 7, 8 a.m. in the morning. 9 o'clock is when the magic happens, but I skip a few hours to see general directionality because it's usually not immediate. If it's immediate and I'm thinking too long, then I simply skip a trade and I wait for a solid level. So you're only catching a knife when you don't really know. There are some levels that are technically likely to hold price, and there are some levels that you can draw based on lows and it will not hold because that's just way too traditional and too easy for institutions to eat up. So it has to be some sort of level where people are not really, you know, expecting to. So the call to 107 was made using this system. The call to 16K was made. If you want, I can actually backtrack and show you how 16K was visible for me when we were sitting at way up high in the range of like 70s and 60s, and so and then also how that bounce from 16K brought us all the way up to 120, and how that was also evident, and price is now doing what it's doing. But that's on the macro side. But it's the same principle. I'm just talking about intraday players right now. For you guys who have a couple of hours at your disposal, you need to understand where those hours are. It's not when you have free time, it's when the market has free time for you. So just because it's convenient for you and you say, well, my schedule allows me to trade from 5 to 6, doesn't mean you can you're being a pig if you don't respect the market. And I say this in a good way, you know, because if you're able to identify where you're being a pig, I'll show you where I'm being a pig sometimes. You know, and it slips under the radar, and sometimes you just can't catch yourself. It sneaks up on you, right? But most of the time, that's not the case. It's just very rarely it catches you off guard. So let's drop down to now that we established that the market has specific areas of high probability setups where you can make money, which is the CPR opening in the second half over here, CPR opening in the second half over here, CPR opening in the second half over here. Now you can actually know that you have to get up early or you have to make plans for the market, because if you want to avoid all the noise, you will be at the CPR open and you will be here at the half. That's just how it is. We cannot bend the market's will to our own. It's the other way around. It will dictate to you based on your system where it performs the best and where it fails to generate yield. So 15 now it's starting to look like, okay, well, now I can see a little bit of consistency. Now we're seeing micro trends and we're thinking, okay, 1 hour, you know, that's way too long. But now we're seeing there's a little bit of consistency here. There's a couple of trends. We can see where stop loss placements could be handled. And just before we go any further, let me go back to 1 hour. I just want you to like log that in there. Let's say you're on the hourly time frame and you remember that if you're trading below the daily pivot open for the majority of candles, I don't care if they're bullish or bearish, then it is likely that you're going down. And your next immediate answer, like your structure of the market, your understanding is, where are we going? And we're just going to high probability setup. We will backtest from 107 and I'll show you how we got here. It's always the same. And you're like, yeah, but am I holding all the way down to this pivot low? Maybe a small size. And the way it's calculated is this. If you're not taking profit over here, for example, let's say we had a bearish punch out somewhere over here. Let's just say, I'm just guessing, right? Red candle, punch out. Now, if you're measuring pivot to pivot punch out in this manner, your take profit at 1 hour is exactly at your pivot level, right? But let's say you have determined that pivot level, pivot low is previous low is where this is the previous low, this is how it gets printed, is where you're going to take profit. After all, this is where the stops are. And you're thinking price has to sweep those stops. But we know that that's not always the case, because price sometimes comes very close and somehow by grace, these guys who went long over here, they end up not getting touched. Turns out we can actually find out if we're going to post a higher low or a lower low in advance. Let me show you how. And this is something that you can backtest. You can have fun with that. So we're back to 1 hour, and I'll take my favorite indicator of all, which is the ruler. This is not an indicator, but a tool that is indispensable. The ruler is basically everything. That's your capital preservation tool right here. So measuring ruler, and let me just draw a line from here to where the price is now. Okay, and this is all I'm gonna do. And oh wow, ooh. And we're going to just take a look at this where the price was, right? Forget about what's happening right now. But where the price was is the HC theory that I have been pushing for over 4 years now. HC is half candle, meaning you're looking at 1 hour, but you're also looking at a 6 hour candle that has a long wick, like this long, and a small body due to this. And that is not sustainable. That is not something that within a single candle indicates demand or oversupply. And the reason I'm saying this, the ruler is important because if you were to measure, the HC would be sitting at your pivot low. And I just want you to understand something here. If you don't take profit where the candle was, and if you're short from this level, it will probably reverse on you and make you stress out because it'll instantly put you underwater, regardless if it has the intention of keep continuing to going down or not. But if we had a bearish punch out and that level gets tapped, if the blue level, the punch out level gets tapped, you're going to have an immediate reversal. I would say 85% of the time, depending whether we're in a range bound environment. Yes. Trending, I'm not sure. We might break above it, but I have rarely seen punch out levels not get reversed immediately after hitting them, especially if it's within the setup and not out of the bounds of the setup. So here we have the HC. The HC half candle, or it illustrates that you have 1R. So your stop would be here, the safest, right? So you're like, okay, I'm putting a stop here. And if your entry is here, whatever the contract size that is given you, 1R this is an hourly time frame, guys. 1R is a very long time, and within a day you only have so much time. So to increase that 1R, you have to drop to lower intraday time frames. I don't know if you're tracking, but you should be. Now this applies to macro. What you're seeing here will spill over to higher time frames and higher time frames and higher time frames. It's just to see the results on those higher time frames will take months. This is why sometimes when I say things based on this system, nobody really cares. But then when it happens a few months later, nobody cares again, because it's like, I should have listened. And so the understanding that I want to give you here is this, that treat every setup that you see for yourself as a 1R setup and take profit on time. Leave the 10% runner, but make sure that you're taking 90% out. I don't care if you're, I'm out a lot of times, like, I'd like to hold my trades, but it's never a good idea because we don't really know what we're holding it to. So this level right now, as we're moving down to the pivot low, previous low, there's a probability chance here that we might not even touch it. And I'll get to that now. We know the direction is towards the pivot low, but we're not really being stubborn, being pigs, holding it, thinking that, yeah, sure, we're going to hit it because it's right there. There are currently things that are in the way of this candle. And given that it's a weekend, I wouldn't be surprised if we chop a little bit and not hit that level today. So taking profit at 1R, if you do your magic ruler across all of your setups, you'll realize that there's an instant guaranteed reversal, high likelihood of a reversal happening after 1R exactly. There's no way you can hold for 10, or can you? On this particular time frame, on 1 hour, we cannot, because exhaustion follows after a whole day of selling. A new world zone opens up where people on the West are now buying the dip and price instantly reverses. Maybe they don't want to follow the trend. Maybe they think it's a great buying opportunity. But for you as a trader, that doesn't really matter. That matters little, because you're there to take profit on time and not really hold or wait or anything like that. So we have ventured onto the 15-minute time frame. And again, if you were to confirm, and you can get your confirmations here earlier, we're going to talk about the wrecking ball, our helper. But skipping these trades over here, if you're short Let me zoom in. Let me just bring that realism back into trading. Okay? If we zoom in and you're like, okay, we opened, we broke the trailing steps, momentum is going down, and we're probably going to go down. Now, price doesn't really travel all the way to the high probability level in a manner where you have one candle up, one candle down. It usually needs to consolidate, chop before continuing in the direction, and this direction is certain. But over here, if you were to go short, here's my point, right? Let's do this. Let's do this properly. Let's do this really neatly. If you were to go short right at this candle, since you just closed below on a daily, right? Pivot open below the yellow line, you remember, yeah, when we're below the yellow line, we trade in the direction of down, okay? But you do understand that price needs to consolidate. We've been pumping the day prior. Where do I exit? Do I really think that price is going to now happily go down like this? Right? This is your mindset, and you're thinking, no, it's going to consolidate. And the way it consolidates is it finds the nearest high probability level. Now, the only ones I have on here is 1, 2, 3, and 4. There's only 4 of them. There's no more. Those are the high probability levels on the CPR. And your thinking is, if you were to go short over here, for consistency's sake, price went up. Let me just see by how much, because this is 15. This is also kind of crazy. But yeah, 47 points. And you're thinking, okay, where am I gonna exit this? And you're exiting at high probability level, which is this green line. It's BC, remember, it's bottom center of the pivot, BCP. So right over here is your exit. Now, from this point of entry down to your exit, you're at $148. That's your travel distance. Now you're on a 15-minute time frame, and if you look at the ATR over here, you can see that currently on this expansive candle, compared to all these other smaller candles, ATR here was 115. ATR here was, and what's with the magnet? Let me turn that off. ATR here was, for example, it would have shown you 127. So remember how I always say that you should be planning to exit your trades on the ATR? Remember, you are intraday. Well, what kind of trader are you? I don't know. I'm referring to intraday traders right now, and this is the strategy for you. So if you were to look at 179 currently and prior throughout the whole day, and if your entry is here, and if your exit is not over here, 0.13% down, right? And that took about, 15 minutes, right, for the candle to, even less for you to exit. This would have been the trade for you. Now you're thinking, okay, but what's my size over here? What am I really getting myself into? And a bear using this setup would have made some money here, and a bull buying the high probability level and exiting back at another high probability level. So a bull is over here, he's exiting over here. This is what is meant by bulls make money, bear is getting short over here, exiting over here. Bears make money, but pigs who continue to hold, they go long. They want price to travel by at least 500 points. They're ignoring the ATR rule. They're ignoring the time of the day, things like that. You know, they're holding. Price goes against them. It hesitates, it wears them out, it goes back down, they close over here, price hits high probability, bounces away from the high probability, goes back to another high probability. And so this is the chop zone. As a range trader primarily and not a trend follower, I'm telling you that this is something that you need to ingrain in your mind, because it's very important to understand these principles. Now take a look at here. Again, we're using our ruler, and if you were to enter here, you don't have to be a genius to see where I'm going with this, but if you were to enter here, and let's say your stop loss would be anywhere above the yellow line, because your understanding is if we go back to the yellow line, if price reverses, then we are effectively, and I'll show you an area on Bitcoin from a few days ago. Well, that was the day when I recorded on the scooter, where I saw that it was chopping kind of through this level. But this is the kind of attitude that would have saved you even there. And so if you were to take the ruler and measure this, the HC is precisely, listen to this, precisely what your entry would have been on a confirmation that we're now heading lower to the next high probability level. So you're pinging this level, your confirmation is the breakdown of this level, and please pay attention to the trailing steps as a secondary layer. Here we only have two things going on. We have the high probability CPR levels and the trailing steps. Trailing steps are really bad inside of a range, but once you have a breakout, they kind of they're a momentum indicator where you can actually use it as a point of entry, point of reference to see like how far away are you from the. I'll show you how to use those in just a moment. But like over here, you're looking at precisely the middle point of this whole trading setup, and this is the reality for most traders. It is not holding these trades, because if you're trading with any decent size, now guess what? Just like the setup that we looked at 1 hour, here's the kicker. Here's 1 hour, and let's say you were to take your ruler, bring it all the way here. If your entry is over here, right, and your stop loss is at the previous high over here, or just to be safe over here, because you don't know if it's going to cross over. Higher time frames, again, wider stops. But you're holding for a 1 hour trade, and 1 hour trade from your stop being here, your entry being anywhere below the yellow line. This is most likely the average entry for any professional or non-professional trader. There's no way you're catching precision tops unless you're putting your orders specifically knife catching style. I don't call it knife catching. The way we do things over here is more like fishing. Fishing for price, we go where the fish is. So if you don't catch any fish, well, what do fishermen do? Well, they say they go back to their wives, to their houses, and they say, no catch today. This means the level was never hit. My limit order was never bit. And so there's no fish. I didn't catch anything. And this is gonna be super important for future traders. For those of you guys who trade futures, this is going to be very important. So over here on this 1 hour, you're basically looking to hit this level, and this level is telling us that price may not even go below the pivot low, and I'll explain why that is. It might actually stop right here and bounce up and reverse. Wait for it. So the amount of contracts that you would have gotten here to get an entry below here, to get your exit over here at 1 hour, would have been the exact number of contracts you would get. Check this out. relative to your 1 hour trade, if you were to get in on this confirmation trade over here, to get that trade. So if you were to get in over here, so you say 1%, you're still going to lose 1%, for example, right? Or it would have given you more contracts, but your travel distance, because of the fees and everything else, it kind of balances out to roughly about the same thing, which means 15-minute time frame is not really enough for us to scale up and make a bigger trade with more leverage that we can use. So what do? We drop down to a lower time frame, 15. Now I'm gonna wrap this up all together now for an incredible here you have pretty much the same thing, where let's say at the very open you went short over here. Let's pretend you went short over here and you were like, okay, well, my stop loss is either at the wick, that's very safe, at the trailing step, not really wise, or just to be safe at the previous peak. And I'm gonna trade a small size. And you're saying, okay, well, I am going to hold off my entries over here, my stop losses over here. I'm doing this so that you may understand what you're dealing with in terms of numbers. And you're saying, okay, we broke down below and immediately went against you, but hey, why do you care? You already know that. So here we go, right? So you put a stop loss right here. This is a 5-minute time frame now. Your entry, again, at half point for a 1 hour trade over here, right, is, well, you just exited right here, theoretically, right? If you had a trade, you would have been sitting over here exiting. Let me just read the chat and see if anyone's like... Yeah, PGen, so 15-minute time frame. So it's all the same over here as well. And the one thing that you need to remember is, in terms of CPR, right? Previous low of the day is not guaranteed to be swept in a trending market like what we have seen. We have been trending up, but price will always come back to this level, to the previous day's open, to retest it. Now you guys know what the baseline is. You have your price, you have baseline crossover. The price needs to come back, retest the baseline, bounce, find demand, and post a higher high for a confirmation, right? Right. So this philosophy of reclaim and retest applies to these levels as well. Pivot points like this, daily opens, will never be left on the daily time frame, on the daily setting of CPR, will never be left alone, no matter how trending the market is. It will always come back. This is the point where price will always come back to retest that level. So the way it's structured over here, right? I want you to think like this. The way it's structured here, it's almost like there's a baseline here, is the exact same freaking thing. When we close below this pivot yellow line, it is like losing the baseline and closing below it. Then we're retesting it, and then we're falling to where? To probably the previous breakout. So what I'm saying is, whether it's horizontal or flexible lines like the moving averages, it is always the same. You have your reclaim, retest, confirmation, momentum. Timing, because these lines are fixed in the beginning and half, and a moving average doesn't have that, like the TMA, it doesn't have that. It's just perpetual, right? So you're using it almost like as an indicator of exiting the trend when it's no longer there. And even then, it can just, price can just kind of grind below it in this manner before reversing. So tell me if you're seeing this and you're understanding this, because I really want to get this across to you, right? When you have this thing over here, right? This is kind of like the baseline loss, then reclaim, then retest, then continuation, and then finally we go down. So just try to frame your understanding about these visual cues in a way that you have been doing with the baseline. The baseline is very simple, but this is the same but more powerful. It is more it's high probability. It's fixed. It's always fixed, and the beauty of this is that it never changes throughout the day. Once it's fixed, you kind of you have your map. You know where price is likely to go. Yeah, I would love to have a structured video, but I'll need time for this. And I think that if we do a Q&A session style breakdown of these occurrences on the chart, right, it's much better, because I have never seen a situation where two friends or partners or mentors and mentees or whatever student-teacher relationship, I have never seen them throw textbooks at each other and say, here's my scroll of knowledge. It's always like, let's sit down and talk about this. Yeah. So this is what we're doing. So that is it for in terms of understanding these levels, how they're structured, right? I mean, in the beginning of this stream, I told you that we're going down here. So it's not me who told you this, is the freaking thing over here, the indicator. So now the second part. So 1R. Let's before I give you the juicy part about the stop loss strategy, right? I need you to understand where you are at any point in time throughout the day at these markets. And why does this bounce in the middle of nowhere without touching the high probability level? So now that we understand, I hope you understand what this is. Also, this wrecking ball guy, right? Below price, that's it. We're doing a retest, but we're not recovering. Below price, this is kind of like the taste of blood, and that is your early indication of where price is headed next. There's some cool stuff you can do with this, and we're going to get into it. But right now, the next thing I want you to understand is why the bounce. Why the bounce exactly in the middle between this and this. And if you were to go long and use this as your stop loss, why your exit would have been over here at 1R. Again, everything that we're seeing, we're not really making any money because we cannot scale up here. So far, we're not seeing anything where you can say, holy crap, this is where I can use a ton of leverage, unless you're treating this as a momentum play without any stop losses, where you're manually ready, psychologically ready to hold through the volatility, knowing that directionally, all you need is a couple of $100 travel distance in order to come out and profit with like 25x or something, which is crazy, but it's doable. So bounces, for example, right? So far, we're just understanding that, okay, beginning, middle, below, we're bearish, above, we're bullish. It's always 1R. On lower time frames, we're always holding for a guaranteed ATR number with heavier contracts, with a lighter contract size. Maybe we're okay to hold it a bit beyond that, let it fluctuate, dance around. You understand all this. But now we have to understand why it's important to look for dips in the context of there's something that's beyond this, right? These levels are all fine. Let's go back to 1 hour. Hopefully this is not too, if you have any questions right away, ask, right? But oh man, we're going down hard, guys. I'm sorry, this is gonna sting a little bit for those of you who are like, if you didn't buy 107 and you bought over here, you're done. I'll tell you that right now, just by looking at this. Let me show you something. So on DSR, now I want you to go to DSR and simply switch this from daily to weekly. 1 week. Okay? What do you see right away? Who can tell me in the chat, what do you see? And why was I saying to, I believe I know nothing in our Discord, that they can forget about that 107 level for a while and they'll have to wait for a discount, which is going to take a long time. What are you seeing here? This is now weekly. Everything that we just talked about, guys. Can you give me a suggestion of what are you seeing over here? Well, let's not be silly and me waiting for your answer. I think we're both on the same page. And you can clearly see what I see, that despite all this volatility that happens on the daily, that is supported by a daily DSR structure every day, up and down, overall, on the weekly, you're trending above the yellow line on this specific occasion right here. Now reclaim, retest, significant bounce, high probability, breakout, next level, high probability here, breakout, retest, bounce, high probability, breakout, and now we're going back down to retest this level here. Not this level, this level. It's gonna look something like this. Okay? Now, why is that? Depending on how the weekly opens, right? We don't know yet. We can know using tomorrow's CPR or future CPR, and we're going to talk about that now. But is this clicking? Do you see how you map out, like you start, so Monday begins, I want you to look where you are in relation to this bad boy over here. The yellow will start. Yeah, you can skip Monday, Tuesday, you'll get a clear picture of what price is doing. You'll get a clear picture of what price is doing on the Monday open. And I'll tell you what it will be doing. We're dumping like there's no tomorrow. And by the time you get your confirmation, it will be at 1R. As a matter of fact, when we break this low and people start going short, price will immediately reverse, and it'll be too late for them to take profit on a short. So on a weekly setup over here, guys, you are long and strong. But on a monthly time frame, you're not. So a reversal will happen when we sweep a high probability monthly level, get rejected from that, and this is where we will have, and we have actually done that not long ago. So as long as you're on the weekly, if you map it out, if you're trading on lower time frames, up to 1 second time frame, right? What you have to keep in mind is that no matter what it is that you're doing, whether you're using Poet to scale in, or you're using single limit orders, to your overall direction is up, especially when when we call for levels that are macro, like 107. After that, once we tap, like I said in my short with the scooter, the way it works is that you're going to have to wait for a discount, and you're not going to get it anytime soon. It's just that's just how the market works. You snooze, you lose. So it seems that it's easy to be a buy and hold guy, but it's really not. And this will definitely help you if you're a buy and hold guy. This will definitely help you as well. But all this craziness, if you just zoom out and just change the perspective a little bit, you'll understand that okay, we're okay on the weekly time frame, because for the first time since the dump at 119, when I called for that 107 level, for the first time we have closed on the weekly above. And this is the result of the bounce from 107 to whatever the price is now, 115. This makes sense? Take a good look at this. And so what I want to do for all you guys is to map this out from a higher time frame perspective, and then squeeze it down all the way from monthly to weekly to daily to 4 hour to 1 hour, so you can have that understanding, to finally a 5-minute chart where you will become a marvel at doing this, and you'll be comfortable with knowing where you are and where you're headed. Back in the day when the markets were bullish, people used to ask me, CR, how do you call these levels where price literally kisses them and reverses, like to the T? And that was on lower time frames. And I was like, oh, little information here and there. I gather my intelligence and do my homework and analysis well, and trading is the easy part. So this, you can watch live traders, you can emulate them, you can do all that. To me, that's entertainment. Now, if you know how to study this, if you understand the context, can we go back a little further? It all started happening over here. This is where the orb crossed down, and I'll show you where the bounce is. By the way, I also called this, and we went up like this. This is the banana split pattern. I remember all this. I have all the track record. I was trading this, trailing steps up, banana pattern, and we went up just to clear this guy. But as soon as this broke down and we closed below, and we spent a couple of hours over here on the daily and couldn't rise above it, this is 118, 119. This is when I knew that 107 was coming. But how did I know that all of this would lead us to come down to 107? Well, the truth is, guys, when we broke this over here and we started going down, there were a couple levels. The first high probability level to the downside was none other than this one, 114. 114, I made another call to 107. We could not stop at 114, even though we reversed and came back up. We came back down. The next level was 109. We also had a little pause over here. And finally, just below that, 108,299. But if you go to a monthly setup on DSR, I mean, you can look at those posts. On a monthly setup on DSR, you had this level which was sitting at 107.067. Now we didn't touch it precisely. Like I said, we went a little higher than that. And the reason for that, I don't know if this is too much, guys. I don't know if you're tracking this. The next point is this distance from here to here indicates that this low, the next low is going to be a higher low. If this high probability level is below, and depending on the distance at which it is below and above, we're going to have a lower low. Right over here, this was the previous low right here. This is a monthly, remember this, so a whole month passed. From this all the way to here, that's 30 days. So it marked the low, but it also marked it not below this guy. And so here, let me just, this is so interesting. And DSR has Ranger module, which is going to be really, really useful. Because we posted this higher low, the next low over here is expected to be higher than this low. Does that make sense? If the previous low was below, which simply means, look at me, which simply means it is a lower low. Structurally speaking, any textbook will tell you that a lower low indicates bearish momentum. But the power of 3 is such that you only get these levels here. Printed, we're going lower. But look at the distance. The distance is so small over here between the two. So this would be a relative low, or sometimes they call it the equal low. And so when price bounced away from this previous low, this thing said, well, we're gonna have a relative low, which was right here, which was caught by the pivot open, and price went up, and we never touched it because the distance from here to here is so huge that we're saying that this low is going to be like relative to what the distance is over here. So this is a bit advanced, and it might be a little a cluster of things over here, but hopefully that makes sense. This is all very important because this gives you like a whole snapshot of what the market is doing at any given time. Is the music putting you to sleep? All right, let's get away from monthly and bring it back down to daily. And now we're gonna go down to our hourly time frame. And we can see here that 1, 2, 3, we're gonna have one more bounce, and we're not gonna be posting a low relative to this. Like I said, there's a good chance we might bounce. So bounces, right? Let's move to that before we get into the ultimate point of stop losses and size and momentum. So the bounce over here, right? Now there's just not enough information, and this is what MarketSpy is doing. It's when there's not enough information, when we have the basics down, once we know that do not trade between these two levels when they're tight, or actually you can trade, what I mean is exit based on ATR and exit based on these high probability levels. Hold on a second. Why do we have the views? The views are like super. The hyper count. What is that? Let's bring that down over here. I think. I don't know. So now that we need to add more information, we're thinking, okay, well, what can we possibly add to here? Well, basically everything else. But the first thing is DSR's Ranger. So we have our trailing steps. They're based on ATR, once again, 128, breakdown distance before a reversal, before a trend. But in our DSR now, we're gonna bring the Ranger rails, and we have them set to 1 hour. And Ranger rails are basically they're volatility based measurements of where price might go, and they add buffer to the high probability CPR levels. And so if we're near like this BC, for example, right, the Ranger is going to measure like these moves between pivots. So it's a pivot to pivot system again, and it's going to show you where the support is. And so, for example, if we were to look over here, when we came up from here, this is where I went long, right here. And I still have that long. And I said in the P&L wall, Ranger, bears are in danger. This is why. So Ranger now gives us a little bit of cushioning and support where otherwise we wouldn't know what to do with price action. So for example, it can be used as a trampoline of sorts to propel price into the new daily open of CPR, because we need to know, are we going to go up or going to go down? So the general rule of thumb is if you have Ranger supporting price action from below, this is a 5-minute time frame with a 4-hour Ranger activated. Now we can squeeze it down to 1 minute and 1 hour ATR. I'll show you how to get the best trades, but for now we're still mapping it out. Now Ranger will support price and show you what it is going to look like on the next open. And so when we come to, for example, the high probability level over here, and we start bouncing and dancing around it, we can actually more or less use it to gauge volatility and say, okay, well, we're confined in these zones, and price is going to now when it flows like this, it's usually bullish. We have breakouts that's definitely bullish, and so on. So this is with the context of 1 week. What is weekly DSR CPR levels floor looks like, and it's bullish. We have seen that it's bullish. So what do? Well, now we're actually looking to buy any opportunity where price meets with any sort of demand zone, which would be indicated by a Ranger. Now momentum, we get added on momentum because instead of just buying it blindly, you're not going to buy falling momentum, right? You need to wait for it to recover, and you're like, okay, now it's good. All right. And when the recovery happens with the context of higher time frames like weekly as well as monthly CPR levels, right? Whatever's happening over there, that now you're thinking, okay, anything that interacts with a potential new higher low on the daily, on the open, anything at the pivot open, anything that the Ranger provides as support that is backed by momentum. This is an undisputable price action that you can actually trade. So technically, if all stars lined up like this, now I know this is recent and you might say, well, this is not fair, but it's like, you know, not only do we make those calls and little quips here and there in the chats on Discord that you got to keep track of, but you're also looking at these things technically within a small span of a candle like this or like this. You can leverage up really, really high leverage, because the conviction here is you're going to go for a little travel distance, and maybe you only need like 500 points. And looking at this price action, what is 500? Well, it's this right here, up to the next high probability. So you're skipping all this, right? When you're here, momentum is looking bad. Just wait for things to turn green. Now, if this wasn't enough, ladies and gentlemen, you turn on your Armageddon and you just wait for green candles, man, and the baseline reclaim. I mean, so you have your DSR map of where price is going. You have your Armageddon, which gives you the flips, right? It flips directionality. You have your pivots supported by higher time frame. There's nothing else that you need to know. And you have your momentum. You need to be here, press 100x, chase price, get on a limit, sweat it out for 5 minutes underwater, watch price jump by a couple of $100, exit and walk away. And wait for next day at the beginning of that CPR. And this is probably your best bet if you wanted to make money. Now, then I can go on. Then there's like the flags, which are the pit points, the checkpoints, dragon skin, trampoline, the classic stuff. You guys already know this. When price penetrates a moving average, when all of them are resolved, for example, you have your, it's very rare when you have that resolution, when you have your baseline 1 and 2, 3 and 4, all of them are lined up, fanning out, 45-degree angle, strong momentum, above weekly pivot open. Actually, here's another little moment. On your MarketSpy Armageddon, you will have your indicator spy panel, or the Christmas tree as we used to call it. Is just going to look a little different in the next update. But you're going to have your weekly open versus pivot, and daily open versus pivot. So daily close is above pivot, but weekly close is below pivot. So this means that on the weekly time frame, currently our previous close was below the weekly open pivot, which means we're going to come back and retag it. Okay. And the reason I bring this up is because it tells you waiting for direction. So this is another part where you kind of scan through these changes and realize that, hey, I'm not a pig to be forcing trades here. I'm just gonna wait for resolve. That's the most important thing. To price needs to resolve and go with determination, with conviction. It's not you who's having strong conviction and sizing up. It's the market. The market needs to have conviction to support you as a pivot / momentum player who needs acceleration that exceeds the normal ATR rating, so that you can get in big, you can get in at the right time, and you can get out just as fast, just as big. Yeah, it would be nice if we had some tools like tactics, MarketSpy tactics, which is in the works. We're gonna bring Poet back so we can do like one button templates It's going to be much more improved this time around, where it will just know where to, based on all this, we're going to program that in. It's going to know where to exit. And so that saves us a little bit of time, but you should be able to use your discretion to map it out like this and skip the noise. And so if you see something like this where it's all broken, when you see like VVS is all choppy, stay away from it, because you're not a pig. You're not eating leftovers. You're waiting for resolve. You're waiting for price to actually do something. Now, looking at a naked price action like this, I can't. I don't know if I can't trade it. I cannot trade it. There needs to be a system. There needs to be some visual representation of what price is doing. Like, this is not, unless you're just trading based on daily opens and higher lows and stuff like that, maybe you can emulate what I'm talking about here. But this is definitely a very, very systematic kind of thing going on over here, where it repeats itself over and over and over again. So yeah, a breakdown on the Ranger, for example, on bearish momentum indicates price going down. And again, if you were to trade something like this, right, you have your trailing steps, looks clean, a very trendy environment on the 5-minute time frame here, and the day has begun over here, and you're like, okay, but where are we going? Where are we going? Well, remember I told you that price needs to sweep previous day's pivot, which is right here. So this is where we're going. By that time, you can already see how there's like some curvature over here. Price is starting to discover. We have trailing step breakout. Trailing step is just like the baseline, except it's way faster. So choppier in consolidating environments, and obviously just like every other indicator. But understanding this should give you just enough information here. So and again, this is like the half point is over here. This is the half point, and right at that half, this is your second chance to make money. Right at the half, we had a drop, and you would say, oh, why? Well, because we kind of like retested, and pay attention to how thin or thick those Ranger levels are. All right, the thinner the better, as in the chances are that there will be volatility expansion is higher as a result. It is the mirror image of CPR, but it actually calculates volatility, and I'm not talking about just ATR. So Ranger is really good at understanding where price can no longer be contained within the Ranger rails, and a breakout is going to happen. So there you have it, guys. Just the brief of it. I am going to make a comprehensive sort of guide about this, but I have recorded that loom, and it's pretty much me going over that loom once again. And finally, what you need to know. So we have the weekly time frame context. Again, above yellow, good. Below yellow, also good. When it's too tight between BC and yellow, not good. When there's distance away from yellow to previous low PL or previous high PH level, that's very good. You have travel distance. You're gonna make a ton of cash there. If it's squeezed and you're trying to trade like down and up, you gotta wait for a breakup or breakdown. How do you do that? Now it's time to add more information. So now we have rails. We only have 4 elements over here, and then we go for classic EMA ribbon. Surprise. Like what? Yeah. So classic EMA ribbon. The way we interpret that is Above it, people are willing to pay a premium. Below it, not so much. Flirting with it, decision moment. Now, when price flirts with it, like this over here, you're being a pig if you're trading it, front running it, thinking that we're going to have a breakout or we're going to have a collapse. Remember to wait for your MSX to resolve and turn clean. You should already know what I mean by clean or dirty setup. Use the GPS dots as alerts, but don't just buy them. That's ridiculous. Do not do that. Wait for Ranger to show some support. Let it cross over. Go at a premium. Confirm that you're above the yellow line. Confirm that the Ranger rails are super thin, which means breakout, explosive move, momentum, right? Confirm that you actually have momentum over here. And stop switching time frames too much. Understand where you are on the weekly. Understand how you open on the daily. Understand ATR and support, and that you need to exit whatever it is that you're trading. Understand that it's always 1 hour. So for example, here's your confirmation. You break down. You're like, boom, my entry is right here. Okay, let's take a look. You're exiting on Ranger. If you're not exiting on Ranger, you're insane. Plain and simple. But let's say your confirmation below this line, below the daily, and you're like, I'm putting a stop right here. Not only do I have my 200 EMA here, I'm also looking at the peak, which is not good. But we have just resolved to the upside, having a little dip, and certainly you're not waiting for price to go lower and lower and lower. You're exiting right here. But even if you were to exit using the 1 hour principle, right? And this is very healthy in the beginning, before leverage, before anything else. You're saying, okay. Because, you know, if you indicate in your calculator or whatever, like on Poet, we can just say, hey, 1%, right? And it'll say here's the number of contracts. If you want to, if you don't want to lose more than 1%, but also as price is going down, you're probably going to make your 1%. That is what 1 hour is. Now from here, assuming your entry is here, down to about here, and we're using absolutes, that is $400. You're on a 5-minute time frame, guys, and you look at the ATR, and I guarantee you ATR was here, it was less than 200. So if you're in excess of the ATR and you're looking at 400, you're doing really good if you're able to capture this. So even though it's a small, tiny little move, the principle is still the same. Daily pivot open below it, a little bit of confirmation, anything to give you that little conviction that we're going down. But also don't be a hero and say we're going down by a couple of thousand points. That's ridiculous. On the weekly, you're supported to the upside. CR is yapping in the chat saying that 107 is gone. Don't count on it. You're at 110. You're not looking back. You go up here, and you have, where's your high probability level? All the way up here. So once you're up here, remember the distance, the bigger the distance, the better. That means price has that space to travel. The tighter they are. Now let's bring more elements in. We're going to now activate central pivot range zones. And immediately, this is the part where I was super excited. I said, look how thin it is. My mind was blown, literally blown, when I saw how thin these levels were. Right over here. See that? Thick is going to take some time, but thin levels, let's just denoise this a little bit. 5 minutes is too much. Just want to get the point across. Yeah. So right over here, we have extra thin levels. And again, breakout, retest the previous to confirm that this is a breakout. Do the same here. Come back, hold, go back up. And now it's getting thicker and thicker and thicker. And so it's going to be super hard for us to keep climbing up on the daily setup. This will chop around. This is immediate support. You have your curvature over here. So a bit more upside before we collapse, but this will be clear by Monday. But yeah, and that's pretty much all you need to know. If you have any questions, because I lost myself, I don't even know where I am anymore. To me, this is super clear. This is what I've been doing. This is how I'm able to call more or less precise. I wouldn't say precise. There's no such thing, but good levels that deliver on the promise of set directionality. You know, whenever I say that this is where we're going, this is probably where we're going, and this is not just me. I'm literally looking at this thing, and I want you to be able to do the same, because whether you're a buy or hold trader, or if you're actually like a scalper, day trader, intraday, then you're working with lower time frames. And I'm gonna get into stop losses, but probably not in this video, because I kind of overdid time-wise. I overdid myself, and I'm not sure if anyone's listening, and I'm a little tired now. It is consuming. It's intellectual work, guys. You're killing me out here. But yeah, this price is going up. Now the question is, would you be shorting this now? Yeah. And my answer to that is pivot to pivot. I would probably be shorting it over here. We still have time. This is the weekend. Are you a bull or a bear? Now, today, you could have been a bear and a bull, but not a pig who would hold and hope for one thing or the other to happen here. And so it's gonna chop around, and it's inviting you, if you want to be that animal, right? You don't want to be that animal. And so we wait and we see, well, what Monday brings. But today's price action, this is pretty much like this whole we started streaming from over here, and boom, this whole candle again. Let's come back to what we started from. And if you did not take profit, like I said, let's say your conviction, so you're rejected over here, right? For example, you came down and you're like, this is a high probability level. Came back up, and my stop would have been where? Well, over here, price came back. So if your entry point was somewhere around here on the breakdown of the second high probability level towards the next high probability level right here. So the magnet is strong, you have your momentum, you have bearish acceleration to the downside, weekend chop, whatever. This what it does right now doesn't matter. But 1R would indicate that from your entry down to your exit, literally at the wick over here, right? If you did not take profit, 400 points later, at 180 the ATR reading, there's something wrong with your strategy, and you need to understand your exits better before you even start worrying about stops. Because what I'm going to do in the next sort of hangout conversation with you guys is what is this thing over here, man? It just keeps dropping on me. It's heavy. The next thing I'm going to talk about are not having any stop losses, except you need them to calculate your size. You don't really need them to be there, because your job is to find trade setups that are going to get you the directionality right. From there, you trade the ATR value. You can leverage up. You need 2-3 consecutive candles that are going to be directionally correct. All right? That's the end game. Nothing else matters. It's not holding through the chop, surviving volatility. We cannot do this as retail. We need to find a point on the chart that's going to have 2 or 3 consecutive candles that as soon as they tap that ATR value, we can exit like 50%, put a stop loss at break even, goes 2x ATR, exit another 90% of that 50%, leave 10% running, put a break even, and just let it run, let it rip. So there's a strategy like this, right? And this is how you get there, by understanding structure first. And that's pretty much a daily occurrence if you go back. So now I urge you to kind of strip the DSR down to these basic parts, add them in, and tell me what you see, and bring the discussion back to Discord and ask questions and challenge it, or maybe be amazed and say it is clear. If it is, I hope it is. The point should be that this brings clarity to you. P-Jan, I need specifics. Please do. DSR should be able to help you map out your day ahead. Armageddon should be able to help you time things better on literally the change of the color of the candles. And MSX is supposed to support that momentum flow by giving you that understanding that you're gonna have that little oomph, you know, for at least 2-3 candles, so you can leverage up, get into a trade, and exit. Because if we can't do that, then using big leverage will just set us back for a number of days, if not weeks. For me, sometimes it happens for weeks. I have to grind back. And but then I noticed personally that you can have these setbacks. A whole month you can be wrestling with this entity we call market for a whole month, and then you're still gonna land on a beautiful trending setup once all this resolves. But weekly we've been going up, and we'll continue to be going up for the midterm, right? That was established. I mean, look at my short, the short that I published. That scooter, I was right. That scooter is amazing. And the point is not to trade, because clearly right now, if we don't know, if we don't understand, like for example, right now it's chopping through a Ranger, right? Over here it's got a rejection and a close below a yellow line on falling momentum. So bears make money, right? Here, this is a pig territory where you just broke down below a high probability setup. You bounced on nothing. No stop losses were eaten. This is just algorithmic murder of pigs, because price is floating, volatility is expansive, because weekend retards are starting to, that's a bad word to use, sorry. Weekend heroes, leverage heroes are starting to, like, you know, act up over here. And so you see all this, and then the market makers are like eating them, right? So this is why you don't trade this. This is ugly. It's slow. But we did know that from here, we're going to fall. Actually, we started our stream over here. And compared to today's ATR, that's a 700 point during this whole conversation. So that sort of like, that is what the bears are there. They made their money. The bulls over here, on the first bounce over here on the high probability level, second bounce on the high probability level, they probably made their money up to the next high probability. But anybody else right now, this is why I wanted to show you this, so that you don't make the mistake of being called a pig, like what that take profit trader email talked about. We must understand, what does that actually mean? And all I'm saying is that DSR can clearly show you what that is. Remove everything and just leave the high probability levels, and understand that when you're between the yellow line and when the high probability level is super close to it, that's 300 points only. That's merely double the ATR. You're going to get chopped up, down, up, down, up, down, before going in and the direction here is like the day started bearish. So up, down, up, down, up, down, but you already know that we're going down. But then you're like, going down to what? Well, you can use little things, like for example, on the 15 right over here. And you're like, yeah, okay, well, we break down over here. I'm going to capture these 2-3 consistent candles to the downside over here. And that's it. Candle is in excess of ATR, totally violated the ATR rule, got sucked back up, and this is the result. And so intraday, we don't get to hold, we want to capture this is going to come in. The reason I'm preparing you for this is because take profit trader, right? Prop firms, I find that this is so important over there. I only have about $1,000 to go before getting funded, and I'm doing like very little sizes here and there, you know, just and not during the crazy New York session. That's what I realized, that's just not for me. But something like this, you know, pre-market that leads up to that craziness is something that I will be sharing with you. This is consistently replicable. This is something that you can replicate and test. And there we have it. Too much going on over here. The point is to start off like this, just kind of take it from there. So this bounce at midpoint, like I said, you can play with this, but if you really wanted to understand why, it's because price took too long. This is the half. You know, you see that half label on your DSR, the half label H. It's rare that we get to the half and we continue. It took all day with small candles, right? And this is why I said DSR's Ranger rails are there to help you support your ideas. And you can clearly see what happened here. Just took too long. So hence why the bounce, and it's at the half, which is usually the reverse of whatever price was doing the other half of the day. And it's literally half the day. It's 12 hours after the daily candle open. So wherever you are in the world, you have to conform to this to make it work, and it will work. But you cannot just come in randomly and decide that you happen to have a few minutes that you want to trade. So try to catch the open and the close of the CPR, basically, or in other words, the pivot open or the pivot close, which is the same exact thing. It's just it's the daily candle open, and depending on where it opens and how it opens relative to what CPR is showing you here, and all the other things combined, try to find 2 or 3 candles. And if you just glance at this chart and you can see the consistency where it resolves, you can see how that's roughly 9-8 hours of nonsense before you have a little bit of consistency. 9-8 hours of nonsense before consistency. 9-8 hours of nonsense where the pigs trade before you have a little bit of consistency. And for that to happen, you need to float. Oh yeah, this was the non. No, this is not the. Was it non-farm? Yeah, this is the Friday non-farm payrolls over here. Or something happened here. I don't know what it was, but it came down. But still, the whole day through, right? It was choppy, but we floated and stayed above. And this is something that, this is why I said, like, stop losses here, you're safe. But if you were to trade that, roughly speaking, right? Let's just do this again. If your stop loss was here and your entry was above the yellow line, and your exit is literally on this one little candle over here, and that would be on the break of the DSR. And good thing, because if you held, came back down right back to your entry point, so it doesn't really matter. Good exit overall. But you floated above. Can you survive this volatility? Let me see. That's 500-600 points. If I were to make my 1%, which is roughly between $700 to $1,000, right? $700 to $1,000. I don't think I would be surviving this volatility easily with the size of a couple of 2-3 bitcoins in order to make that. So regardless of what happens here, for me, where would I put a stop loss? Well, probably on the longest wick. And if I were to quickly scan this, I'd be like, well, I don't have any long wicks, like literally until this came in. This posted a wick, but momentum was crappy, and then I was like, okay. And then it went up, and then you wait a little bit and it goes up, down, trading at a premium. This ribbon prices at a premium. This ribbon, classic, prices at a premium. It's choppy, yes, it's choppy, but you have your momentum, okay? It's condensing, it's above, so there's like, it's worth it. It's worth giving it a shot. And watching the orb, making sure that it doesn't drop below price, so it doesn't close below over here. So you could arguably say that either your stop loss would be here, or either on the lowest point of the Ranger or the yellow line, because below that you're closing and you're going down, so you don't want to hold past this level. But then again, you can also have a mental stop loss, measure your size. Imagine you have a stop loss here, because what sometimes happens is price will come, hit it. This is a very desirable level to, especially in futures, when New York opens, if we're trending like this, first it'll go whoop. I usually just put a stop loss buy limit order here, stop limit, and I get picked up and like bam, $500 and I'm out. So that's a very quick way to kind of get there very, very fast. This is a significant level. It's where price opened, and that's all there is to it. At a premium. Currently not at a premium. So we're hitting that PL level probably by, I don't know when, tomorrow maybe. But it is choppy. This is quite significant. Like, for example, I would not be comfortable. I see the wick here, but this is not, for me, this is not a demand type of wick. Although this thing is showing me right now that this can happen. So it's showing me that we're having on the hourly like a lower high basically. But again, this is where the oink oink would basically trade. All right, guys, that is it. I hope you have a great weekend, and I guess I'll see you in Discord. Futures, there's so much to cover. There's so much to cover. But if you have any questions, do let me know. Just tag me in Discord or something, and I'll hop in there, check, and then we'll dissect it, because we have to discuss this. If you're not talking about this, if nobody's asking questions, it's so pointless. But I'm pretty sure that this particular setup here, this is how you can start building conviction and directionality in your assessment, right? Analysis is important, but what's more important is if you realize these things, start from the top, just look at the price, understand where you are on higher time frames, and just drop this thing down to 1 month. Here, I'll leave you with this. How about that? Let's go to daily. See how the day opened at a high probability level? Guess where we are? This is monthly. This is something that we have not seen. We have tagged this level and this level. Yeah. We have not looked at the monthly. Now remember how I said we're going down on the daily time frame? You want to buy the dip, basically. Even though we're going down, this is a daily time frame with a monthly setup. And you're above the yellow line. You just swept this. But there's a very good chance that this chops through like this and does this. It is entirely possible. Do not discount it. This is Bitcoin we're talking about. But it's showing me that it's going to have a very, so this is marginal high. This is relative high over here. It's going to have like a very sort of retesty period over here on the daily time frame. Very likely. However, we're only at BC after a little dip. I don't know if it's gonna go all the way down here. Very unlikely, but it is going to come back to here, stay a little bit, break out, and probably attempt to clear the previous high. Now, I wouldn't be surprised if that happens, because these are high probability levels right? They're high probability levels. And it's going to be very choppy. It's going to be very choppy because we're so tight in here. Yeah, there's nothing beyond this. So I think we're going to float here for a little while till maybe the end of the year or something like that. But this 107 level was a long time in the making. We finally hit it, and every time we hit one of my levels, it takes a bit of time before we go back and hit it again or create a new low. Over here, it's not showing me that we're going to create a new low, but it is showing me that we're going to be chopping. So this video session was perfect to prepare you for that kind of chop. But anything that goes down, you want to be buying it, because we're going to be, yeah, we're going to be chopping here real good before we head up or down. And this is good for me because at least I know where price is going to be for the next few weeks. And for the next few weeks, you know, we're on the weekly above here. We're on the weekly above here. We're kind of topped out on the daily, so this is going to go down a little bit. But trailing steps are active. Everything is good. We're not going down anytime soon. I hope nobody is short over here. Our community doesn't do that. Like, you cannot go and short the level that I'm calling from here, man. Like, you can, please. I hope not. God. So there you go. We're at BC. It's a beautiful monthly setup, but very choppy. So buy the dip when that happens, and I think it's gonna happen. So we're gonna have a few candles to the downside and then more upside here. This has not even gone up to, so it can get really interesting here. And so any kind of dip, I urge that you buy into it, but do expect it to get a little freaky. Yeah, 112, no problem, possible. Yeah, it's gonna cool off, chop through this thing. See again, 112, cluster of candles over here. Will probably bounce from here. Up to maybe 114, 113 and a half, and then go back down again. And then we'll see, but there's a clear developing trend over here. So it, whatever happened, whatever you saw that madness from a few days ago, yeah, on lower time frames. We just looked at that little non-farm payrolls chop or whatever that was, CPI data. You're gonna have the same repeat on higher time frames, but crazier, right? We're talking about $10,000 swings. So just be ready for that. That's all I'm saying. It mirrors exactly what happens on, yeah, look at this wrecking ball. It's not going to be able to overcome these candles easily over here. I mean, so lots of chop is coming. Whenever there's like contact of price with previous price, which is basically what the wrecking ball is doing over here, you're gonna get this over here. You're gonna get crazy stuff happening here. So thank you for being a part of the stream. I'll see you guys in our Discord. I gotta sign off, unfortunately. It's been a pleasure. Thank you so much. See you next time.